Hey there, Darren Garman here, and welcome to this episode of the Heartland Multifamily Show, the place for all things multifamily. And man, I'm excited about this episode because I'm actually going to reveal to you why rate of return is secondary, and actually why rate of return should be secondary when it comes to your multifamily investing. You're probably thinking, what are you talking about, Darren? It's all about rate of return. Everything's about rate of return. Wrong. You're wrong, and I'm going to tell you why that's the case and how you can actually profit from this being the case as well. Okay, but first, before I get into my reasoning, my thinking, and why I'm really recommending you adopt my thinking on this, just a couple of quick things. All right, first of all, number one, I'd love to hear your comments. I'd love to have some dialogue with you on this episode. So do me a favor, go ahead and below here, leave your comments on what I cover in this episode, and let's have some dialogue about this, okay? And number two, if what I talk about on this episode resonates with you, if this gets you thinking a little bit, make sure you click that subscribe button to not only get involved in the future Multifamily Show episodes, but hey, you can go back and check out past episodes as well. Welcome to the Heartland Multifamily Show, the shorter, more profitable path to multifamily ownership and investing. Okay, let's jump into this. You're probably thinking, Darren, what are you talking about? I mean, when it comes to multifamily investing, the first thing I got to be thinking of, and probably one of the only things I need to be thinking of here, is rate of return. I mean, it's got to be worth a good rate of return for me to get involved in. And if I let's say I bring partners in with me on this, man, I got to talk to them about rate of return. And when I'm meeting with my lender, if I'm getting financing, I got to talk to them about rate of return. And then if I'm talking to my CPA or my tax person, rate of return's key, Darren. So what are you talking about here? Well, I want you to think about something. And by the way, before I go any further, of course, rate of return is very important. Okay? It's got to be. It's got to be important in order to spend the time, effort, and energy on owning multifamily. Man, it better be worth it, right? From a rate of return standpoint. So that is kind of obvious, but it's not the first thing you need to be thinking of. It needs to be secondary. Okay, secondary. Secondary to what, Darren? Secondary to what? Secondary to place. That's right, place. I want you to think about this. All right, what good is a rate of return? What good is a projected rate of return if the place that you're investing in kind of sucks? If the place that you're investing in takes a sudden turn for the worst, if the place that you're investing in goes what we call here in the Heartland south, okay? If the place that you're investing has something called shit hits the fan with it, what good is a great rate of return if you lose your money, if you lose all of your money or even a large part of your money? At that point in time, you're not really talking about or thinking about that great rate of return, are you? Not at all. So this needs to be like number one in your thinking. So let me give you an example. So if you and I are walking down the street together today, and we stop the first 10 people that we see, and we say, okay, hey, answer this question. Where is the best place to own multifamily right now? Where's the best place? Okay, you're going to get answers, big city answers typically. You're going to get answers like Dallas, Texas, Nashville. You're probably going to get answers like, Fort Lauderdale, Florida, et cetera, et cetera. You're going to get those kinds of answers from most of those people. And by the way, I'm not saying that those are wrong answers, but those would be the answers you get. How many people would say Iowa? Iowa is the first thing that comes to my mind, and actually, Iowa's the place. Look, we both know that that's not going to be the case, all right? Iowa is probably not even in the top 10 if you ask people to name 10 places that they're looking to invest in multifamily to get a fantastic, a supercharged rate of return. Why not? Because they're thinking about one thing. What are they thinking about? Rate of return. That's right, rate of return. Instead of thinking about where would be a predictable place to own multifamily? Where would be an insulated place to own multifamily? Insulated from ups and downs in the economy, insulated from political things going on, social things going on, heck, even insulated from cyber things going on, okay, in terms of your money being protected, your money and your investment being in a safe place, okay? There's that word again, place, right? And so what I'm telling you is Iowa or is Heartland in the Heartland owning multifamily a 100% guarantee to be the safest place there is? Of course not. But when you think about safe, predictable places that you want to park your money, man, Iowa is one of those places. But most people don't think about that. Why is that? Because they're thinking about rate of return, when they really need to be thinking about place. They need to be thinking about place. So that's what you need to be thinking about too. So when it comes to investing in your next multifamily property, or even your first multifamily property, or hell, even your next investment, rate of return is important. But the first thing you need to be thinking of is, okay, is this a place where my money is protected? Is this property in a place where my money is insulated? Is this a place where this investment or this property where my investment is pretty much in a place of preservation? Because if you don't preserve your investment, if you don't protect it, if you don't insulate it, rate of return does you no good, right? So how can I spot somebody that I pretty much know, we're probably not going to be able to work together? Okay, so I get hundreds of people a month contacting me saying, hey, Darren, I'd like to get involved in what you're doing. I'd like to get involved in multifamily. Is there any way we can work together? Okay, well, if the first thing that comes out of their mouth is, hey, Darren, what's the rate of return there? What's your rate of return? Tell me about your rate of return. I'm looking for a high rate of return. I already know that more than likely we're not going to be working together. More than likely we're probably not a good fit. Not because I don't care about rate of return. Of course I do. It is unbelievably important. But is it more important than place? No. Is it more important than protection? No. Is it more important than insulation of your investment? No. Is it more important than the predictability of that investment? I don't think so. All right, because look, at the end of the day, there really are no wrong answers here. Rate of return, super important, especially in multifamily. It's got to be a good rate of return, right? And really in most any other investment, rate of return is important, but it has to come secondary to place. Let me give you just one more quick example to think about this. It used to be the super safe place to put your money, to park your money, would be a bank, right? I'm going to put it in a CD. I'm going to get, whatever rate of return I'm going to get, but I'm going to park it in the bank. Well, what have we learned about banks? They're not 100% guaranteed there, are they? As a matter of fact, not too long ago, there are some banks that have failed, some pretty big banks, and banks fail every year. So even that place is not perfect. And then there's other places like cryptocurrency, okay? Futures, gold, silver, etc., etc. Now, am I saying those are bad places? Of course not. No. There's a place for all of those kinds of investing. But when it comes to insulation, protection, and predictability, the thing you got to be thinking of is what place provides that to me. Then let's talk about rate of return. Then let's talk about maybe income. Then let's talk about maybe wealth generation. But it's got to start with place. Whether it's in multifamily or any other investment, it's got to start with place. So I can tell you this, my friend. The most successful, especially multifamily investors that I deal with, basically on a daily basis, this is the first thing they think about. Rate of return, important, but place, more important. Okay, so as you think about your next multifamily investment, your next multifamily acquisition as maybe an active investor or a passive investor, or hell, maybe even just another investment you're getting involved in that's not multifamily. The first thing that you need to be thinking about and being comfortable with is place. Once that is your foundation, then you go dig into and take advantage of rate of return. All right? So look, I hope this episode has been helpful for you to at least get the gears moving a little bit there in terms of there's a lot of investment choices out there. There's a lot of definitely multifamily investment choices out there, right? A lot of different markets, a lot of different places to own, a lot of different property types, all of those kinds of things. But one of the things that will help you dig through all of that clutter is what? Place. That's right, place. All right, thanks for joining me on this episode of the Heartland Multifamily Show. The place for all things multifamily. And don't forget, we'd love to hear your comments on what I've covered on this episode today, and make sure you click that subscribe button. Bye-bye.